Welcome back. This is Mike with RPQ. It's June 14th, 2022. Let's do a market update. Absolute carnage is the word of the week. This is what we called back in the days, back in 2008, the point of recognition. This is the S&P 500 cash index, and these two gaps here look absolutely devastating. And I get a lot of questions. Mike, do you see any support anywhere? Where do you draw a line? I'm not drawing any lines in this market. We're talking about absolute market dislocation here, absolute panic. And although we might see a dead cat bounce, which happens all the time in bear markets, bear market rallies are notorious for ripping people's faces off. Don't ask how I know. Well, yeah, I lived it. I have traded through 2008. Remember, look up 2008, September 19th. That's when I lost two-thirds of my trading account that day. And I had to learn some harsh lessons. So if you don't want to learn the lessons the hard way, learn it from me. Being long a futures contract or being short a futures contract right now is extremely dangerous, because in this environment, anything might happen in both directions. Of course, the question you need to ask yourself, what is the upside potential in comparison to the downside risk that you're taking on? And I think that is usually the key question most people don't ask themselves. No matter if you take a long position or a short position, you need to know what your pain threshold is, where you can get out, how you can get out, and if you can get out, and if you can tolerate margin calls, for instance, if you're trading in futures. I always believe that trading options is the safer route, but given volatility where it is right now, you don't want to buy naked options because a Vega squeeze can completely wipe you out. So let me pull up here the VIX for a second here. You probably remember this baseline I've been pointing out for the last 6 months now. It has been slowly building, and it rounded up down here. It started to round it out last summer, actually. Wow, it's been a year now where things start to turn. And it's really interesting, these high spikes, right, which then reverted back down to the baseline. So we have this really manic depressive market. Look at this. Every 2 months or 3 months, we're seeing a spike into the 30s. That is not a normal market environment. And some people, it's like the boiling frog theory, right? By that, I mean, you get used to almost everything, and then you accept it as, right, the new reality. And this is not normal. I mean, these types of spikes continuously. And again, remember, volatility, especially implied volatility, always begets more volatility. And that's exactly what's happening. But what we're seeing right now, again, point of recognition right here. We rarely see this. See that? We saw a gap down here. To see gaps up here in 30s, how often do you see gaps up here? Look at this. You know, there's one here. Okay, it terminated, came back down. Worked out for a while. But these were different days, right? That was back when people still had hope. Okay, maybe not. In October 2020. But it's rare to see gaps. You usually see the gaps to the downside when it reverses, right? I used to play all these, right? I have been playing a very profitable VXX strategy, a UVXY strategy, selling in the money spreads. Really turned out to be very profitable. But this is not something I would try right now. No, absolutely not, because this is scary. And there's no reason that we could not see at this stage a VIX up to 60, 70. Remember that implied volatility is not linearly distributed. So, and only briefly we were down here, but we haven't been really in bullish territory for a long, long time. We've been in bearish territory, right? And I don't have the VVIX here, right? The volatility of implied volatility. Don't have that on this chart here, but you know, we're definitely over again in the Voma zone, and we've been spending a long time in the Voma zone. Voma zone meaning, you know, this is a highly volatile environment. Oh, here's the market opening, and some scripts launching. So yeah, the market has been in this manic depressive mode for a very long time now, and I don't think this is going away anytime soon. Again, volatility usually begets more volatility, and things have to kind of start slowly settling down. But we're far away from this. Also, given what's going on in the market, let's take a look at the bonds, and I'm going to show you some sobering charts here. All right, so if that doesn't blow your mind, then I don't know what will. This is basically a chart that goes all the way back, monthly chart, right? Goes back into the 80s, right? Into the 80s when we started crazy haircuts and music was much better than today. And I can actually extend this line. See that? The support line has been holding up forever, and we just sliced through it, in the last, like 3 months ago. And like, what is that, February or something? And we just continue lower. I mean, some people expected a reversal here, but it's not happening. There's no way of knowing how far this can drop. This is usually what retail investors look at, but institutional traders look at the ZN. Again, support line sliced through. This looks like a market dislocation. And basically, effectively, the Fed has painted itself in a corner. And back in 2008, when I actually started with Evil Speculator and I started writing about it, we expected the Fed's hands to be tied a lot sooner. We kind of had a come to Jesus moment in 2009 and then embraced basically the dark side of the force in regards to bullishness, right? And it's carried us very well into 2021, 2022, but it's becoming increasingly clear now that the Fed is pushing on a string. Its hands are tied at this point. And so it has basically two options: kill the dollar or basically kill the market, because it cannot engage any more QE. A worse situation is happening over here in Europe with the ECB, which effectively is still at negative interest rates, either zero or negative interest rates. And Lagarde has not indicated any intention of taking other measures. And inflation is out of control over here as well. Actually, you guys in the US are much better shape than we here over in Europe. So the European market is going to blow up and things are going to get really rough in the next few months, especially as we're pushing into the winter. But just looking at the bonds here, I don't think that there's any way of a floor here. We might drop to 105, maybe 100 if we're lucky, and seeing a bounce here, but there's just no interest, right? I mean, this just keeps getting worse and worse. Let me show you the TNX. I have that open as well. So looking at TNX, obviously inversely related. This is just an index. This is also a long-term chart, goes back into the 70s. So look at this. A V-shaped formation like this, it's absolutely unprecedented. We've never seen an explosion of rates like that in such a short amount of time, ever, okay? This is a complete market dislocation. This started basically in February of 2020. How far is this going to go? I have no idea. The best we can hope for potentially is some kind of inverted head and shoulder pattern. But can you really chart a TNX like this? It's interest rates. I really don't think so. Is this ever going to come back down here and remain down here? I don't think so. Again, this might go all the way. We're basically at 3.36% right now. But we're reading a lot of articles predicting Sodom and Gomorrah to transpire. Once we're pushing above 2.2, well, things are getting worse, and I don't know how high this is going to go. Basically, bond vigilantes are forcing the Fed's hands at this point, and there's nothing the Fed is going to be able to do. So, again, bottom line, nobody's going to come to anyone's rescue. So the ship has sailed. We've played the game. We had some fun. Everyone went a little bit crazy, and it's back to reality now. Let's look at crypto real quick. Obviously, crypto has really massively been affected this week. Let me zoom in a little bit before we talk about this band I just painted on the chart. This is basically the new system I introduced recently. Again, all you Cryptonaissance or Altcoin Mastermind members will have free access to it for a whole year. It's been basically short per the signal since April 27th. And it was actually short from up here as well, which is April 10th. Yeah. And then I think it exited and then got back short again. Look at this right here. This was supposed to be support. And I was quite optimistic here at this candle still. And that was, I think, my last market update in crypto. And I said, okay, if we slice through this, it's 50-50 at this point, right? That's what I said a few days ago. If we slice through this, it's sayonara time. And, well, I wasn't lying. The idea was we would breach here. We would basically overcome this. And we're off to the races, right? Potentially running here back into 40,000. So well, that ship has sailed now, and we're down here now. We're trading right now at 22,300 and something. And since we're in cash now with Cryptonaissance, I fully expected to wake up this morning and see Bitcoin back at 25,000 because, Murphy's Law and just our luck, right? But no, I mean, it's still fighting, and okay, it's fighting its level, and it might actually paint a dead cat bounce. I fully would expect that. It happens all the time. Anyway, so as I'm zooming out, you see what I'm referring to here. See all this resistance, right, that now exists that used to act as support, right? Okay, that's a nice view. I mean, look at this, right? Way back here. Oh, wait, it's not too long ago. That's the tail end of 2021. We started bouncing here a little bit, continued upwards. And then last summer, we painted all this. and then proceeded back up. And here we actually were kind of levitating a little bit above it, which was weird. And here this was the make or break point, right? We had to hold this. And this spike low was really the line in the sand. And once this was breached, look, even if we bounce here back to 30,000 tomorrow, anything can happen, right? Absolutely. How is it going to overcome all this with what's going on recently? Yeah, everyone's going to start bidding up Bitcoin at this point. I really don't think so. Not with what's going on in the equities market, with the CPI getting worse and worse. I mean, what's going to be next month's CPI? Is it going to be 10%? I mean, the one that the Fed is going to admit to? I mean, it's ridiculous. Effectively, we're at least 16, 17%. Check out charostats.com. And you get some real numbers. We're closer to 15, 16, 17% potentially. Some people say more than that. But here in Europe, Estonia admitted to close to 10%. And that's actually realistic. They don't lie on the numbers. And it's going to get worse over here in Europe as well. So don't think Europe is going to be spared. We're much worse shaped than you guys are over in the US. So anyway, coming back to crypto, right? We could easily drop here down to, my God, 15,000, potentially even 10,000, pre-COVID levels. Absolutely possible. Okay, so several questions that came up. First question was, is this the end of cryptonaissance? Absolutely not. Obviously, the plan is to leverage gravitas right now, which is basically a swing trading approach, to call the swings better, the medium-term swings. And that will provide us with more fine-grained guidance moving forward. Specifically, when we are in Ethereum Bitcoin season, when should we potentially reduce position sizing or potentially go into cash? That's something I'm considering for the future, absolutely. For now, we're just looking at the signal. Again, everyone's going to have access to that for free if you're already a subscriber. If not, yes, I'm going to sell the system at some point. Let's watch it for a little bit more. I need to get everything into place for this. But my priority is right now to take care of my existing subs, keep you guys on the right side of the tape. And so far, it's made really good calls, the system. And it's made really good calls, just trading it forward. That slice right here was predictive, and it clearly indicated where price is going to go, and that's where it's going. So inversely, it's also going to tell us when it's time to go back into the market. And I warn you right now, it's not going to be happening at the very lows. It's not how the system works. Right? Sometimes it gets lucky, and it gets us close. And if the price action is so inclined, it will get us close, but it's not going to call the exact top or bottom. Just no system will ever do that. For that, you need a crystal ball. Watch my previous video when I introduced Gravitas the other day. It's on my YouTube channel, so check it out if you want to learn more. But it's made really, really great calls, and it's really doing well calling the swings, and that's exactly what we need. And so that answers the question, the next question I'm getting. So now we're out of Bitcoin or Ethereum. When are we going back? Well, yeah, it's going to be a while, I think. Right? It's going to be a while because we have to reverse a lot of damage, and the system will only switch back into bullish mode if, again, the Kalmans cross back over into bullish mode, and also with the slice through some netline buy levels. There will be actually a new one once this candle finishes here. Say this right here. Actually, after this candle, we're going to see one right here. There should be a netline buy level. Yeah, 1680. And it's going to take time. For now, this system is short. That's the perspective. The final question that comes up, how do you trade this? Should I short the futures? Yeah, theoretically, if you have deep pockets, if you have an account, over, let's say 100,000, 200,000, you can consider trading the futures short. And I've traded futures since 1999. I started with a futures trading firm back then. I was a partner in briefly. And that's really got me, actually, I didn't know anything about trading back then. And that's actually put me on the road. That's how I learned about trading, and shifted over to equities, Forex, and options trading especially. And that's actually, options trading is probably the way to trade the short side. Alternatively, if you're holding Bitcoin, you could use the futures to hedge yourself, but I might as well just sell your Bitcoin. But I will actually put together a comprehensive video on the topic, because it's something that probably a lot of people want to know. Yeah, great to have a short signal on Bitcoin or Ethereum, but how do I trade it? Well, it's still a bit late right now anyway. So if we would go back into the game, back into the game means taking action. And by that, I mean, next call would be long, and that might take a while. If we produce more context here, let's say we bounce back up, okay? We bounce back up, we do some retests, we produce more context on the short side, like a new netline sell level. Yeah, that's actually something, a signal, the signal will be providing. Let me show you this real quick. Here's the signal. It's not on here. These are the signals you're going to find if you're a subscriber already, either Cryptonaissance or if you're Altcoin Mastermind, You're going to find these channels in your account when you log in a day or two. I'm setting up right now. Just have to get everyone subscribed to this. And you're going to see these daily reports are being triggered shortly after midnight UTC. That's around 8-ish p.m. in Eastern Standard Time or 2 p.m. over in Pacific. It's 2 a.m. over here in Europe. And I don't know in Asia where it is. But that's when usually crypto rolls over. And that's when this report is being generated. And you're going to see basically here some information. That's the report for Ethereum. In this case, it's short. The closing price right now, I mean for yesterday actually, for yesterday night. And that is the current return in USD terms. And that's the current return 58% in terms of percentage. But it's just a way for us to keep track. I think options would have been a great way to play this. And again, I can provide guidance on that, and I will, on how best to play it with options without getting killed via Vega squeezes and things like that. But also below here, you will often see, and that just doesn't happen all the time, a notification if a netline sell level or netline buy level has been breached. And that's very important because these are usually action points. That doesn't necessarily mean that the system goes long or short, right? Because it has extra rules. But let's say the system is short and we slice again through a netline sell level. Well, that might be the point where you decide to take action and actually get into the market. In between, while the system is in a campaign, if it just started, let's say it just started like 2 or 3 days ago, even a week ago, but this one has been already active since April 27th. It's June 14th now, so it's been a while. And I wouldn't necessarily decide if I was getting the signal, not knowing anything else, I wouldn't decide to jump into the fray here based on that. The same signal here on Bitcoin, again, similar. It's been producing context here every day. Same here, 42% based on an entry that would have triggered the same day, actually. So that's basically a bit more context. And again, yeah, you can trade the futures. If you're a futures trader, if you're a savvy futures trader, this is going to be great for you. Otherwise, I would really discourage people from trading the futures, or heaven forbid, go a Deribit or something or any other exchange and try to actually short positions there. You're going to get your face ripped off. So don't do that because, again, bear market rallies can be violent. And if you're facing a margin call on futures contracts, maybe it's also low liquidity at that point, things can get really ugly. So I would be extremely cautious. The best way to place this via options, but not via naked options. Again, I will provide more context on that. If nothing else, look at it this way, right? Look at it as an alert for now to know when to be long again in the crypto market. And again, right now, everyone is completely cynical about it. People are distraught. People are getting disgusted, which is good. We're getting closer to a market low. And MVRV, the Z-score, we're approaching levels. I don't have that chart open right now here, but I've shown it a few times. We're getting closer to levels where actually a market floor could be in place, but I think we're still quite a bit away. So don't try to guess where a market low is in place. This will provide really good guidance. It's a bit conservative. It's not going to call it at the exact bottom, but when the market is in a situation where, statistically speaking, based on the system, based on the testing we've done, there's a high probability for a medium to longer term trend to continue upwards again, per the rules in place, then the system will tell you, right? It will tell you, okay, it's a good time to be long again. And that will also provide us guidance over at Cryptonaissance. Then we can go say, okay, we're going back into Ethereum, we're going back into Bitcoin based on the signal there. But for now, we should remain in cash while this system is pointing downwards, while it's pointing short. And again, this is not going to change tomorrow. It's not going to change tomorrow based on what I'm seeing here on this chart. I mean, just reading the price action again. And I've showed you this before on Bitcoin. There's a bunch of resistance here, and that will have to be overcome. And that's not going to happen in one day. That too much damage has been done. And we're not done yet. I mean, also in equities. Ask yourself a question, and that's my parting words. It's already a long video, but my parting words are this. Nothing's going to fix this. Nobody's going to come in here with angel wings and magically fix this market. The Fed's hands are effectively tied. It has engaged in various QE initiatives for the last, well over a decade now. And it tried late tail end of 2017. I posted about this. When it actually attempted to slowly increase interest rates and the market through the famous taper tantrum. And this time it's worse. It has made a decision. There is no way of saving this. And it's also, we're getting conflicting messages from the Fed. One day we hear rumors about, well, we might postpone further tapering, blah, blah, blah. And all of a sudden it turns around and we're getting 75 basis points. So what does that tell us? Well, do these guys look like they have a lock on things? I think they know what's coming, and things are going to get pretty ugly here, and they know it, and there's no way of sugarcoating this. And it's hemming and hawing. Bonds vigilantes are forcing the Fed's hands. There's nothing they can do. Again, it's either kill the dollar, or the dollar is already in big trouble at this point. We're looking at potential hyperinflation here. Again, shadowstats.com. That's the real inflation. It's worse over here in Europe, much worse. Prices are exploding on all ends. We might not even have fuel for the winter over here. For the winter, it's going to be a cold winter. And you guys in the US are actually in better shape than we are, believe it or not. So nobody's going to come to your rescue. The Fed is not going to be there to provide a crutch. Back when we had the Greenspan put, that one is gone and it's never going to come back. Well, we might see a few stick saves, right? A few stick saves where we see a big, some spike ups, right? One more time, pull up the S&P 500 real quick. Well, it's short as well. Guess what? That's looking pretty good here at those signals. When would have gone short right here. Oh, I love the system. We might see some stick saves. It might right now after these gaps. It wouldn't be unnatural to see an attempt to retest. The market will not recover into anything resembling a bullish market phase unless we push back above, like, what is that, 4,200? And I don't see this happening anytime soon. I predict more pain ahead. That's it for today. Don't forget to subscribe to the channel right up here. Upvote the video if you liked it. And I'll see you next time. Cheers.